Yeah.
Selling futures into strength, Pete, this is something that I think you could have applied to a lot of markets over the last year. Almost every market, as we've continued to trade in a range for the most part, aside from some equities and some dog-oriented cryptocurrencies, most markets in a range for the most part, which means that you've had opportunities to sell those markets into strength. I want to look at metals here today, given the big rally in gold and silver last week, but maybe you can quickly speak to this phrase, because I think this is one of those phrases that I think people hear a lot in passing, but until you take a minute to sit with it and think about it, it might escape you. It's actually a pretty simple strategy, selling something into strength.
Absolutely. And, it's interesting that you brought, because obviously the reciprocal of this is buying into weakness. And I think up until recently, where people have had the ability to trade both sides of a market, and I think you and I look at opportunities, whether it's buying dips or selling rallies, we don't have a bias as to, well, I only like selling upside extremes and not buying downside extremes. We're completely neutral as to assessing the strategy. But I think when you look at this from 10, 15 years ago, you didn't have a lot of opportunity to sell stuff. Selling stock is very expensive and very difficult to do. People would always tend to, you had a long bias. So if you were looking at something, you were in the commodities world, it was the same thing. The energy on rallies used to always have much more energy to it than the breaks. I don't think we see that now. We see an equivalent amount of energy on both upside and downside moves in the commodity. So it's interesting. So selling futures into strength is that classic of that rally, that extreme. We're looking to take advantage of that stream. It's interesting because also you mentioned selling it into strength. Strength you could talk about as price movement, also strength in terms of, velocity. There's so many different ways you can define strength.
Yeah, and that's a couple of interesting things there you bring up. One is this idea of and it's something that I love, and it's not to poke fun at you at all, really, because it's something that I think is just human nature, although I've already poked fun at you plenty today, so I've reached my quota, so I won't. But it's this idea of did those rallies feel stronger than the breaks in commodities just because there's and this is something that we hit on here today. When you sell something and it can theoretically go infinitely high, there's something that freaks you out about that. So crude oil, for instance, if there's a $5 rally in crude, it feels scarier than a $5 break. But I would contend that any data set, the last 5 years, the last 10 years, the last 3 decades, they're probably pretty equivalent. And I think we've done, and it's funny because it's one of those things that I bring up because did it feel that way or was it that way? I would contend that it felt that way, but thankfully, since we have so much more data at our disposal now, and I can crunch so many more numbers, we can kind of do away with those ideas and actually sell stuff like crude oil, or we're looking at today metals, into strength without people having, because there's always that fear when you sell something, right? It's like if I buy it, it can go to zero for the most part. If I sell it, it could just rip against me and not stop going against me forever. And there's that fear is in people's minds. You know
what, though, for me, starting my career in commodities, we didn't do stock arbitrage. We traded treasuries and currencies, and I traded a lot of S&Ps, but I always felt neutral on that, Frankie. I always felt that until last April, it was always to say nothing could straddle the zero bound. Well, we saw, given the perfect storm, something can't straddle the zero. I don't think everything else can, and I don't think we'll actually see that again in our lifetimes. Who knows? Maybe that guarantees we will. But because being a short to medium term trader and looking at that, if there's a break in beans from $14 to $10, you can argue that to me has the equivalent amount of pain as moving from $14 to $18. I don't think wow, beans can go up to $30 and they can only go down to zero. I know well before either of those things, I have gotten to a pain point where I'm mitigating that trade.
And that's great. And that's what I honestly I think you and I push people out there to try to do, because you brought up buying into weakness. which I did a show on a couple weeks ago while you were out, and it was a great segment. I think a lot of people liked it. We looked at the U.S. dollar, which
Not as
now is
many as you
putting
thought.
not as not as many as I thought. But yeah, the US dollar not as good a trade as I thought because it's continuing lower here, but it is a matter of having both sides to that coin. It's truly, selling into strength, buying into weakness, trading futures from the long and short side and having zero opinion of it. Like that is as close as you get to neutral options trades, right? Like where it's like people want to go in there and they want to sell iron condors or strangles, or they want to sell calls into strength or puts into weakness. This is the same kind of thing we're talking about. And I want to bring it here into metals, Pete, to get some people some context, an example of selling into strength, and then hopefully put the odds in our favor for a little bit of a trade this week. Gold and silver, considerable rally over the last couple of weeks. And it doesn't look like much, Pete, but the 5-day rally of 3% has happened rarely in the last couple of years here. And every single time we've seen a 5-day rally of 3% or more, SPRE, which is gold, silver, and platinum in one futures market here. So showing you in one market the rally in precious metals of the last couple of weeks. After a week like we saw last week, Pete, SPRE has fallen the next 5 days 66% of the time. Now that's a great number because it pushes the odds from 50-50, Pete, to 2/3 in our favor if you are looking at a short strategy coming off what we just saw.
Yeah, absolutely. And I mean, statistically, we always want to move that 50-50 bound. Now, sometimes we do intuitively, other times, which is great. You bring so powerfully to the table is the statistics to back up what sometimes intuition tells us. Oftentimes we find intuition is wrong. The numbers don't lie. And it's funny, we're looking at spring now. Friday, we went back. This was the only trade we could really find. We found a corn trade, but this SPRE short was really the only trade we could find. And statistically moving it, some of the most profitable firms in the world move it to 52.48. Now, that's not what we do, but to move something statistically like that, and we never lose sight. This is why we have mechanics and management, is there's 34% of the time. But I'll always take 66 as a tradable opportunity.
Absolutely. And, maybe you don't have the wherewithal to download data sets from like Yahoo Finance in different places, or frankly, like maybe you don't care to. It's a painstaking exercise that I get paid to do it. So I do the research here. I get paid way too much to do it, according to my friend and manager here, Pete. But, these technical analysis tools that put probabilities in your favor are all over the place. They're in your platform. If you look at stuff like Bollinger Bands or just standard deviation measures, or a lot of people like relative strength indices, or we give to our subscribers every week, we update the values for like the 5-day forecast, for instance, which we use realized volatility to project the next week's worth of movement. And this is from last week. And we saw on Thursday and Friday this SPRE market get up north of $75. And that's when we looked at a short, and it's a little bit off today. So in our favor from that short, but this is just an example of another tool that you have in your platform that if you want from the small exchange on the smalls, subscribers.thesmallexchange.com, look at the offering. We send these numbers out every Monday on all the small products. And you can find these and access them. It's not a matter of finding one thing like I have here, via number crunching and just waiting for the SPRE market to rise 3% in a week, because that's just one tool in what you want to be as wide a toolbox as possible.
Right.
That being said, Pete, and I brought up the example earlier of buying into weakness. I bought that US dollar future a couple of weeks ago and it went through me. So that was a trade that was, I think, around 65% historical success rate. It didn't go in my favor. What happens that 35% of the time when metals don't revert? Do I just hold on to the trade? What do I do so that I got the probabilities in my favor? And in the long term, even if this trade this week selling SPRE right now, it's that 35% where I don't win. How do I make sure that those losses don't outweigh my 66% win rate there?
Well, and this is what we always talk about is we We like to start with the idea of symmetrical management. So we have a strategy, we have a bias. This is a great strategy, 66% on the 5th-day up move. Now, what's interesting is 5-day up move, but we're not quite back into the middle of the range. We're not looking for a middle of the range trade. Different strategies. So we have our strategies, our mechanics. And what I like is when we find probability trades that are 66%, I don't suggest we change our win-loss metrics to, I'm going to risk 34 cents to make 66, but I may adjust that a little bit because I've got a statistical advantage. And the key part, though, is at worst, you maintain some sort of symmetrical management because you can't ignore the 34%. It's an incredibly attractive trade, but it's a very real outcome that 34% of the time, if you do 100 trades, 34 of them could eat you alive if you're sitting with this trade till 80 cents. This is the key part where we're playing statistics. This is why we trade actively, and this is why we trade small, and we have mechanics in management that stays consistent because, the plus minus $100, we sold this on Friday. I took $48 out of it. We were looking for 50. I wouldn't give it a second qualm as to what we were looking for because we didn't sell. I think we sold, I want to say 74.88, and we did not get that 75 plus level into the marketplace right now. But you know what? Different strategy within a different set of market extremes, and the statistics are very powerful. But I think this is what you're hitting on is this idea of I want to come back and open my doors the next day. And the one thing for me that I've found through 30 years of trading is when I don't manage that, when I don't stay mechanical and decide on those exit levels before I put on the trade, I find that I've removed one half of my trading strategy. And what I mean, empty half my toolbox because I can't buy them because I've got so much invested in this short. I am basically trapped in only trading one side of the market. And that paralysis, that trap feeling is where everything breaks down.